Hilary Joyce C. Callanta, a first-year BS Accountancy student, and here is my presentation. What is accounting? Accounting is a service activity that is formally defined as a system for providing quantitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decisions, with its 7 phases, which are identifying, measuring, recording, classifying, summarizing, analyzing, and interpreting, and lastly, reporting. In accounting, there are typical titles used for the statement of financial position. First, the assets that are classified into 2 sections. First are the current assets, composed of the following account titles known as first, cash, second, cash equivalents, third, notes receivable, fourth, accounts receivable, and lastly, prepaid expenses. And for the other section, there are non-current assets that is composed of the following account titles known as the PPE or the property, plant, and equipment, accumulated depreciations, and intangible assets. And next, the liability accounts, which are separated into 2 classifications, which are called as current and non-current liabilities. For the current liabilities, the account titles it have are the accounts payable, notes payable, accrued liabilities, unearned revenues, and current long-term debts. And for the non-current liabilities, here are the following account titles used. First, mortgage payable, and lastly, the bonds payable. And lastly, for the statement of financial positions, the owner's equity section, which is classified into 3 account titles, namely capital, withdrawals, and lastly, the income summary.